Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we are looking for a three-wave corrective structure and then another move towards the downside to take the low at 49k. In this case, we have a finished wave W to the upside, a zigzag ABC, a finished wave X to the downside as well, a zigzag, which is common for a wave X, and then in wave Y, we are looking for a flat, a three-wave A, three-wave B, and then a five-wave C towards the upside. The most common target for your wave B is between the 1.236 and the 1.38 Fibonacci, taken from the start to the end of your wave A, which as you can see is nicely respected. In this case, we then want to see an impulsive structure towards the upside, ending somewhere in the common target area for your wave C, which is between the 1.618 here at 62.8k and the 1.618 at 65.3k. One of the 1.618, it's taken with a trend-based fib extension from the start to the end of A to the end of B, and the other one is a normal Fibonacci taken from the start to the end of wave B. Now this area is in confluence with one of the resistance boxes that I have here, sitting between 64.6k and 65.4k. If we go to the second scenario, we are looking at a bigger three-wave corrective structure. Here we then have a first move towards the upside in either a wave W or a wave 1, looking for that bigger three-wave corrective structure WXY in a wave 2 / a wave X, and then move towards the upside in either a wave Y or a wave 3. Now the probabilities are at the moment a bit higher for a WXY just because of the three-wave nature of the move towards the upside, but as shown in the live stream earlier today, there is at least a chance to count this as a five-wave structure, and in this particular scenario, the price action between a wave 1, W, 2, X and 3Y is quite similar. Now in this case, your wave W is a zigzag, your wave X is a flat, and then we look for a wave Y to the downside. The most common flat is an expanding flat where we then have 3-wave A, 3-wave B, 5-wave C. It is exactly the same flat as here on the chart, but your minimum target for that flat would be the high of wave A. It is very rare for a wave C to not at least take the high of wave A, and if it doesn't, we talk about a running flat in A, B, C, rejection, continuation to the downside, but a running flat is very rare, never preferred, unless all of the other scenarios fail. After 2x, finding support on one of the two boxes I have to the downside, first of all 54.6k to 55.3k, and second here 52.3k to 53k, we want to see that move towards the upside towards 65k. Finally, the third scenario here, where we already have a finished wave 2 or X, and we look for a move towards the upside. So here again, we have a wave 1 or a W, three-wave finished corrective structure in a WXY, and now we are looking for one of two scenarios, the purple line or the yellow line. Now, if one wants to be bullish, then in this particular scenario, you want price to move towards the upside directly and not take the low. In the yellow line, you can see that we move towards the upside, preferably not take the high at 61.9k, and then move towards the downside below this low. That would increase the probabilities for a more bearish scenario, which then is the WXY, because what we are looking for here is the zigzag to the upside in a wave W. Of course, in a wave 1 is an impulse, so actually I should remove this. We're either looking for an A, B, C, or 1, 2, 3, 4, 5. Then we have a WXY, double zigzag to the downside in 2x, and then look for price to move up, either in a zigzag, in a wave Y, or an impulse, 1, 2, and then 3, 4, 5, continuation. Alternatively, we have the flat 3-wave A, 3-wave B, and then a 5-wave C, increasing probabilities for the bearish scenario WXY, where we then want to see price move towards 65k. Now the reason that preferably when you do follow this flat structure here, don't move above the 61.9k high to increase probabilities for the bears is because of this scenario, because as mentioned here, we actually want price to move above the high of A at 61.9k before moving down, and that still gives you the opportunity for a wave 2. If you move towards the upside first and then move down, the probabilities increase for a flat structure, the yellow line here, which is more bearish. So this is something to at least keep in mind. But if I put on all of the polylines together, then you can see the confluence between the different lines and therefore the different scenarios. And as you can see, all of these scenarios are eventually still looking for price to move towards the upside to very likely take out 63k still. The bearish scenarios, the more bearish scenarios where we are looking for an impulse down, have a lower probability. But if I then also open my boxes here, you can see the confluence between the lines, important support below us here, which I think is very interesting because the low that is made on the chart over here, I didn't really have any significant area of support over here, right? Yeah, I had a daily naked point of control before over here at about 57.2, 57.1k, but it failed because we closed some candles below. And over here, I didn't necessarily have like awesome support, but I do have a box down here. So I definitely would like, that's a personal opinion, right? Not data or probabilities. I would definitely like to see price moving lower and test some lower support areas. Then look for some signs of strength over here, move towards the upside, some nice bullish CVDs to then move towards the upside. But we got to wait and see what we get locally with the structures, right? Now, one thing that I do want to say is that it is Friday. And if we do get impulsive structures like a 1-2, maybe a 1-2, and then a wave 3, 4, 5, 4, 5, preferably you get wave 3s before the weekend. If it is Saturday, and we are still hanging around this area here, the probabilities are a lot lower that you're gonna move up in an impulse wave 3 during the weekend, which increases the probabilities of sideways price action at the area where we are now, and therefore also to potentially still test 55k. So this is something that's good to at least keep in mind, as generally the probabilities for the weekend are higher to move sideways in a ranging structure. Now then finally, what you see on the chart is the most bearish scenario. I spoke about this in the live stream today, the video earlier today, and yesterday as well. And it remains the lower probability scenario where you're looking for an impulse towards the downside. As in this case, your wave 1 has to either end over here, but then your wave 2 is a flat. Wave B is incredibly deep, lower probabilities. Wave 2 is 8 times longer than 1. And you have a running flat, ABC, very low probabilities. Or you put your wave 1 down here, but then we need to count a 1, 2, 3, 4, 5 here. And wave 4 is incredibly short compared to 2, also lowers the probabilities. The only thing that I might at least consider and keep an eye on, but it is still too early, would be some sort of a diagonal structure, but therefore we still need to take this low at least one more time. And at the moment, it is still too early to call any form of a diagonal, so we have to wait for more information. And still, if we then do move towards the downside for a diagonal in a 1, 2, 3, wave 4 and a wave 5, we still expect support in this area. Look for a move towards the upside. In that case, preferably not take out the high, and then another move to the downside. But as mentioned, at the moment, it is a bit too early. When we look at the CVD divergences, then on the 1 hour time frame, we do have bullish CVD divergences here, as you can see, higher low in price, lower low on the CVD. A couple of bearish CVDs here in this range, all of them played out. And more locally, we also here had some bullish CVD divergences, and these have already played out because we now took this high over here. So of course, preferably if bullish, we like to see price continue the grind to the upside with low time frame bullish CVD divergences supporting that move, which would then be a healthy local uptrend. So if we then look at the probabilities of the different scenarios, then actually nothing changed because the probabilities remain higher to still look for price to take out this high, and then we take it from there. So on the number 1 spot, we have take 63k first, and on the number 2 spot, that would be your most bearish scenario where you look for an impulse 1, 2, 3 down, or a diagonal 1, 2, 6345 correction continuation, you would take 49k first before taking out 63k. But at the moment, with the information that we have from an Elliott wave point of view, the probabilities remain higher to still look for price to take out this high, either with testing 55k or continue towards the upside with the strength of the bullish CVD divergences that we have seen so far. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.